So good evening, friends. A very warm evening to all my professional colleagues out there. It's my pleasure to welcome CA Namita Gad, who's coming to SIRC for the second time to share her knowledge and experience on startups with us. At SIRC, we always make an effort to bring innovative topics for the CPE seminars, and we get both very experienced as well as young upcoming chartered accountants who are blazing their trail everywhere to come and share their experience with us. I think that startups as such is such an interesting topic because every day you open the newspaper, you come across so much of what is happening in the startup scene in the country. And in fact, our own Prime Minister has said in the startup guide, never dream of becoming something if you dream of doing something. And in India, we believe a lot in doing things. And since 2015, when the startup scenario was actually taken off after the announcement by the Prime Minister, the government has actually announced a 17-point program action plan. I think 18-point action plan, wherein they are, trying to simplify and handhold the startup industries, giving them an industry academia partnership, and they do the incubation for them, and then they give them the funding support and incentives. And I don't think I need to tell much about the income tax benefits which are being given to the startup. And these startup ecosystem is looked at as a catalyst of change for the Indian economy, and there's much which is being done by the government. And I think that it's apt that we as professionals, who are handholding all our clients in the startup scenario, that we upskill ourselves and share experiences of whatever we are undergoing and whatever are the problems and whatever are our success points which we can share among ourselves. And it is such a pleasure that CA Namita Gad has actually agreed to address us today and share her experiences. A small intro of Namita. She's a chartered accountant and the founder, and herself a founder of a startup advisory firm. And she has advised over 75 Indian as well as global startups in the last 4 years, and has earlier worked as a CFO of a tech startup. And she's also on the board of several investment fund houses for mentoring startup founders, and serves as a virtual CFO of a couple of startups. And she's actively advising startups on not just financial and tax aspects, but also on business and strategies. Namita is going to share her experience with us, and I hope that we all will be able to take away a lot from your experiences. Namita, thank you so much for accepting our invite and agreeing to share your knowledge and experience with us. Over to you.
Yeah, thank you so much for firstly inviting me and for such a lovely introduction. So I was just sharing with Ms. Revati that it was real pleasure to be on SIRC board, because the the response that we get is definitely far better than WRC, even the feedback post session. So I really admire that. Then starting with the presentation, firstly, this is not on specific topic as such. So let's have the interactive conversation with this throughout the session. And so I would also like to know from all the attendees their experiences if they want to share. One technical problem or technical thing is, if attendees have joined from a mobile phone device, then you cannot unmute yourself and speak. So whoever wants to share something, then they will have to log in through your laptop or computers. Okay, that's
so we can almost also have a Q&A session when people can type in their questions, and we can take that out also.
Actually, sorry to interrupt, ma'am. Sorry to interrupt. The thing is that those who joined in mobile, right? They will be joining in mobile labs, so they can unmute and speak. Actually, those who are joining in web browser and laptop, they might not be able to unmute themselves. No problem. We have seen at least 50% joining in mobile, so they can unmute and speak.
I'm just sharing my screen. Yeah, you can share the screen, right, everyone?
No, we can see the screen opportunities installed.
Okay. So first, let's understand this is not any technical subject, where we can discuss the rules, regulations, sections, all those things. This is just about sharing what has worked for me, and I would really enjoy if everyone can benefit from this. In my experiences. Okay, so startups, like Ms. Revati mentioned, since 2013-14, startup stories are amazing. Initially there was Flipkart, Snapdeal, and then the whole unicorn things started coming up, and then there was a time when every week there was unicorn announcement in India. So unicorn meaning valuation is more than 1 billion. So it is like phenomenal journey for startups, and how things are changing, everything will end up with technology. So even the accounting job will be you know uh, automated in future. So even if you see any industry, be it manufacturing, trading, delivery, logistics, every segment is automating, because there will be efficiency, there will be cost savings with automation. So we have to upskill ourselves to match with the pace that we are having with the startups thing. So I would like to share firstly my journey, how this started and how things were positively working for me. So I started my CA journey, or this whole career journey in 2009, which year I started the articleship, and then I qualified in 2011. So if you remember 2009 era, even at that point of time, all the service tax forms, VAT forms were physical. We have to fill that up in manually and then submit it at the department. So that was in 2009, and by the time I qualified, everything was automated. We were having traces, I think, then income tax returns were online, service tax was again online. So the automation in government system also started somewhere in 2009, 2010. Then after 2011, I was a partner at a very traditional CA firm. We used to do service tax filing, VAT, audit, compliances. All our clients were, very traditional, um, in the trading of garments, jewelers, APMC market. I mean, all the pulses and grain traders, manufacturing. So having experiences with that set of clients was completely different than now. Uh, they were interested only in compliances. They should not get any notice from the government department. That was their aim. That's it. One second, let me just. That was their aim. We should not get any notices from the department. That's it. They were not interested how CA can contribute in achieving the efficiency in the resources, in increasing the turnover, how they can expand their business. They were simply interested in all the certification work, and that's the reason in during that phase 2011 to 2015, when I was a partner in a very traditional CA firm, people used to switch their CAs only for fees reduction. So if someone else is charging 1,000 rupees less, then they used to just switch their CA. They never understood the importance of sticking to one finance professional or one CA. They were not at all interested in that. And then I got opportunity with one startup, which was in the human resource tech startup. I joined them as a CFO, and then that was a completely different experience for me. We raised Series A funding there. We grew from 30 people team to 100 plus people team in just 12 months. I was there exactly for 12 months from October to September 2016. So there, what I've seen is culture is very, very important. You know, you have to value your people, how you treat your colleagues. That is important. Uh, we never used to call CEO sir by first name. We used to call everyone. So very small things, but that made a difference. And then I realized I have to do something in the startup space. And then I started this advisory firm in 2016. And initially there were very few clients, but fortunately I always got something on the table at every point of time. And then since 2016 now, we have served more than 75 Indian and global startups. We have done tons of valuation. Some of our clients are also unicorn. So we are in the crypto space, which is completely new for everyone. So journey is amazing. We have even Bollywood actor. So all his startups, we advise him on his investments. We advise even investors where they should invest, how they should value, startups. So have done variety of things for startups. So as you can see, I have seen the traditional side of practice, then employee in a startup company, and then the advisory firm where we get our only startups, no traditional firms or companies we accept. So here I would like to understand, because this I want to keep this interactive. Um, if anyone of you would like to share their experience, so if you are in practice, what challenges have you faced? What is client behavior? Like I mentioned, during the traditional practice phase, people were more interested in paying less fees because they just wanted CA certification. Okay, so if you can share such stories or your experiences, then it would help me also to present the next slide, or to take this session ahead. So any of you would like to share something? Silva, we can unmute them, right, if they
Yes,
request.
I have given the rights, ma'am. So those who joined in, remember, those who joined in mobile application, they can unmute themselves and they can share their experience. It's already we have unmuted them. They are in self-mute mode actually.
Okay, so people can unmute themselves and speak.
Yes, please.
Let's share experiences,
88.
because I'll be also sharing mine. No one wants to speak anything.
Actually, we are close to something 85 to 88 attendees as of now. Uh, they are unmuted actually. And if at all, Abhishek from Abhishek Chandra,
Yeah.
Yeah,
audible.
Namita, hi, this is Abhishek here. So, so there's no story as such, from a startup standpoint. And of course, we want to hear more from you. But definitely, one thing which I wanted to mention that, I had some experience in terms of not exactly a startup, but in terms of a company which was 6 to 7 years or 8 years old and looking to raise capital Series A, and we did some work in terms of understanding our business model and the planning process, and then working or talking to the investors community, engaging an investment banker. So I wanted to understand some of the aspects, what difference is there, when you work for a startup or advise a startup in terms of raising money versus a company which is not a startup but into the space for let's say 6 7 years or 8 years, and then looking for raising capital for the expansion of the growth. So that would be helpful.
Sure, understood. Yeah. Thanks, Abhishek, for sharing.
Yeah.
Yeah. Uh, anyone else?
Yes, if anyone want to unmute and speak,
Okay, sure. Yeah. So when I asked you about your story, let me also share some of the aspects which I have seen people having.
Hello.
Yeah.
Hi.
Vikash
So,
Nahar, you want to speak something?
yeah,
Hello,
pleasure. Pleasure. So this is Vikash from Chennai.
Mr. Vikash,
I understand.
are we audible?
Yeah. Am I audible to everyone?
Hello.
Yes. Yes. You.
Okay. So this is Vikash from Chennai. We are sharing our startup experiences, right, with the clients.
Yeah.
Right. So there is one particular story that I kind of it's a bittersweet story that I have. So about 10 years back, I had the opportunity of being a consultant and advisor to a very young startup in Bangalore, and three founders, three engineers who quit their jobs and started the company. And back then, I had the opportunity of not charging the client and actually taking 10% stake in the company, which I did, and I ended up charging the client, which they eventually paid for. And within about 2 years from the time that the company started, it got acquired by Coansys, and it got acquired for close to $15 million. So that's the
Okay.
bittersweet moment I have, that I could have taken a ride and actually gained over 500 times of what I actually charged them at that point in time.
Absolutely. Yeah. Yeah. I can imagine. Yeah. Definitely. So in 2017, I had also at that time point of time company was not having any funds. So and fees was 6 lakhs for what I had advised them at that point of time. So I charged 3 lakh in cash and 3 in equity. Currently value of that 3 lakh is 4 lakhs. And now I think why I charged even in cash and why not complete 6 lakhs in equity. But that's fine. I mean, whatever you get. So equity is definitely one of the options which professionals should consider, and I'm covering that in today's session. Sure. So what I have seen is whenever you get any leads about the startup, then people don't really know and understand what is startup and how does it work. Okay. So that is a real difficulty. Like Abhishek also mentioned, normal company traditional, which is profitable for or currently profitable after 7-8 years, then the whole scenario is completely different. The mindset is different. So if you think company with 7-8 years of experience or history and profitable, they would have in-house CFO or might have in-house CFO or in-house accounting and finance team. So that also changes your importance. So for startup, if it is a very early stage startup, there will be only founders and founding team. Then your importance as a professional is much higher. You'll be core part of the team. Okay, whatever is happening, why is it happening, why we are taking a particular decision, you will always be part of that decision. So the whole dynamics changes if you are working for the startup and versus profitable company. It's not necessary, but so see, if a CEO is doing business for 7-8 years, then he or she would have understanding about the compliances, finance, how does it work. But if you take startup founders, then coming from IIT, IIM, they literally don't understand how does taxes work. Even you would be surprised, people don't know how ESOPs works. Employees with 3 crores worth of ESOPs, I have seen them not understanding ESOPs. What is vesting? What is granting? What are the tax implications? No one understands. There is no education in the industry. And same goes even for the founders. So that is why your role is very, very crucial in any startup journey. So what is the reality? What is happening on ground? So firstly, even if people who follow Twitter, you will see like they tweeting about the traditional practice is going to end. There is no fee in that. If you do GST returns, then also people expect you to do it in 500 rupees or 1000 rupees like that per month, which is not at all sustainable. lot of compliances. So every day there is new compliance under Companies Act, GST, income tax. So even if you are generating UDN, then it has to go on income tax. Otherwise, you receive email from income tax department asking you to update UDN again. Then MCA suddenly asks you to file a form with all your crypto profits, crypto inventory. So that is new to you. Then do KYC. So endless compliances, and people really don't value compliances, which is, if you see, which is right at their end, because there is no value addition for them. So if you are charging even 500 rupees to file that cryptos form with MCA, there is nothing, no value addition for the business. Why would people pay you 500 just to do some stupid compliances, right? So no one is wrong here, but who is suffering is professional. So traditional practice somewhere is ending or having difficult times to do because of compliances, and people really don't want to go for compliances. They just want signatures, and even CAs, they are burdened with all the certification things. Even banker, for something they want CS certificate. Everyone wants CS certificate, client doesn't want to pay for it, and onus comes on us. So it is becoming really difficult to sustain if you are doing only the compliances. Okay. Then if you see career roadmap, so you have to be very, very clear what you want to do. So now the average age of working professional is going to 30 or 35. Okay. Because the way things are moving, things are changing in the market, that is so fast, you have to keep upskilling yourself. If you see NFT marketplace, or how does crypto works, or what is a marketplace, it is very difficult to understand, right? And unless you understand the subject, you cannot advise that client with, even with tax knowledge. So it has become very, very important for you to have one segment. Like I mentioned, compliances are so much that you cannot be excellent in every topic. You cannot be good with GST, you cannot be good with FEMA, international taxation, or tax treaties and income tax. So you have to be very, very clear what you enjoy. Do you enjoy legal reading, legal agreements, advising on arbitration, all those things, or you like assessments? So even in GST, the execution would be different, and then appearing for assessments would be different. So you have to, now I completely believe, strongly believe, that you have to be very niche in what you do. There is no future for generalist. Okay, you cannot do everything, or else you have to have that ecosystem within your organization, where one person is doing indirect taxes, one doing assessment for indirect taxes, one international taxation. But for one single person knowing everything is next to impossible. You will be disappointed with yourself, and you will disappoint even client. It is really very difficult if you see what government is doing. So you have to really be careful about the roadmap. You have to know what you don't want. So when I started this in 2017, initially I got even the traditional clients, who were doing trading of shoes, purses. But I was very clear, I don't want to do that. It is not that I did it from the first place, but yeah, I learned eventually, like, I don't want to be in this space, so let's refuse clients. So at times you have to refuse clients. uh, at the very initial phase, you are so tempted that you want to say yes to everything, but don't do that, believe me. It is okay if you don't earn from a particular client, but once you have someone, it would be a commitment, then you cannot refuse. Okay, so be very picky about your clients, because sometimes it would become headache for you. And if you don't want to be in that space, let's not discover that for yourself. So that is again very difficult. Then short career span, if you see, especially in tech and again in finances, the average tenure of career is reducing. If you see our previous generation, then people used to retire from the same company, So TCS or RBI, if you see those people, even banks people, Then they start at one company and then literally retire from the same company after 40 years. But you won't see that happening now. People firstly switch every 1 year or every 2 year. They want some change. Second, many young people have that advantage to learn new things. Like I mentioned, how does crypto work? That is really, really difficult to understand. And if you fail to understand this, you will fail to advise such clients. You have to understand their language. It is like if I speak in Spanish, then it would be easier for me to connect with that person, right? So similarly, in regional language, people speaking same language, they easily connect and feel comfortable and trust each other. So similarly, if you understand business language, then it is easier for you also to get that trust from your client. It is really very important. So you just need to understand what is escrow account, what is Noodle account, how escrow is different than Noodle, what is server, how servers, they would affect the tax implication, if any. So all those things are very important for you to understand. And then another advantage of startups is everyone is at par. So even 60-year-old CA and freshly qualified CA, they would be at par when it comes to startups, because the experienced one, he or she has that experience about how industry works, but the new guy, he or she has that knowledge about the business. It is very important for everyone to know everything now. You need to have tax knowledge plus business knowledge, very, very important. And believe me, whenever we have call with our clients, um, about 60 to 70% of the time we speak about business and not about tax. Literally, you have to understand how does it work. You have to think beyond taxes. It cannot happen you just explain client what is RCM, then what is LUT, withholding of tax. You cannot speak about taxes. That is your job. You have to take care of that. People want you to understand more about what they do, how they can optimize on it. That so this is my experience. Like, people really want us to contribute more on finance from the business aspect. If we have budget in place and then we have actual numbers at the end of the month, then do the variance analysis, figure out if your marketing expenses, if I'm spending more on marketing, then I should get more users. Okay, if your business is such that users will bring revenue in that subsequent month, that how you are doing that math. So increase in marketing expenses will have effect on increasing users and then increase in revenue in the subsequent month. So you should be very careful about such correlations, and then advise client like, you are spending more on marketing but you are not getting revenue, so you have to try out something else. If you are doing offline marketing, try out online marketing, or something within online marketing, spend more on branding, something like that. So you have to have that skill to interpret numbers beyond taxes. So this is my experience. So what I have shared about the fees, so anyone would like to share their experiences about clients reaction when you send your proposal, or switching their CAs just because another CA is charging less, or non CAs also are in practice, so they are also competition for you. So any such experience? Anyone would like to share any such experiences who are in practice or who are in employment? How do they react when it comes to appraisal, annual appraisal, or giving out bonus? So I have also seen people. I have also seen people, negotiating fees based on your proposal. So if you quote 15,000 for formation of a private limited company, then they take that proposal to someone else and then say, if you charge less than 15K, then only I'll come to you. So I have seen even that happening.
Some experiences shared in chat box actually, those who are unable to unmute themselves. So are you able to see my screen?
Yeah. While compliance is required as a practice. Yeah, absolutely. I mean, you have to understand dynamics of automation and how world is changing. Yeah, definitely. So I have seen this, even within CA fraternity, people are compromising on fees. Please don't do that. If you deserve, then you have to get rewards that you deserve. If you are giving your time, brain, intelligence, then you have to get that. And if people are not willing to pay that to you, then they don't deserve you. Simple. And even I have seen the mindset of clients changing. They definitely pace their CA. If you contribute towards their business, not with respect to compliances, but they do pay. Think this way, if you have seen the startups structure, then one of the founders, which is who is mainly CEO is always busy with fundraise at all the time. Even after closing one round of funding, they have to start with another round. So CEO's job is just to raise funds. So they want someone who will give them peace of mind to focus on their business. If you are handling everything in finance for them, they would be more than happy to pay. Even they would give you equity in their business, believe me. So don't compromise on your fees. And I absolutely agree. It's better to lose client, but don't discount fees.
Namita, one point. This is Abhishek here again.
Yeah.
So I understand. I think sometimes you should not be like underquoting just because you want to get the business. But somewhere I believe I feel that maybe if you're starting new or if you're entering into the practice or a profession as a consultant, at that point of time, really you want that first client, right? To get into any client, and then let's say even if it comes with a very small work of GST or direct taxes or maybe a internal audit or basic compliances. I think that is very key because once you get into and once your foot is into the client's door, then it's up to you how you explore things, and you can add value to the client just by asking few questions or understanding more about the business, and then getting that value to the client. Okay, probably you can do this and you can do that. I think that
Right.
sometimes plays a role in deciding, whether you want to really refuse a client or get into that client. And then, it's up to you how you understand the business, how you can add value to the client. And once that happens, and then he becomes your marketing person, isn't it? No, he will spread the word of mouth that okay, this guy did, and I had given a small assignment, but then he went on to go and understand my business and added this value. So I think some bit of a balance needs to be done in that aspect rather than just blatantly refusing a client just because he's paying less. Yes, that you will have to bite the bullet at some point of time, but I think maybe that's a choice or call that you need to make at every point of time and selectively. That's my viewpoint.
Absolutely. Yeah, agree, completely agree. So there is no standard formula as such, right? Multiple factors would determine whether you should accept a particular client or not. So for example, I got a very first client in virtual digital asset who happens to be a crypto exchange. And literally I was not knowing anything or never did something for crypto client, and that was for the first time for me to have a client in the crypto space. So we accepted that not for money but for knowledge. So once I get that knowledge, I know I am going to, apply that somewhere else and earn that money. So that is one thing. Second, also what I have done is, if you know you won't be making any profit here and you don't have time, then outsource it. There is no problem at all. So this is completely my opinion. I mean, and multiple factors would determine. So we have at times even outsource just because we don't want to lose a particular client. So if you like a founder and you know that that client might bring more clients to you, then you should definitely get such client where their network is so strong that it is good to have such people on your portfolio. So we have also taken some of the clients just for the name, believe me. So there is one Bollywood actor, he is our client. We have them just for the name because it is good to showcase that, right? As a CA, you are not allowed to advertise, but when you meet someone in person, you can definitely share such things. So at times you have to say, if you don't have time but don't want to lose, then just outsource it. Don't be so greedy that you want to do it. Then you will compromise everything, personal life, personal professional life balance. Your people will have to work beyond office hours, so never do that. So that is the choice you have to make. Then yes, I was a virtual CFO, but my job profile turned out to be, yeah, again, I mean, I have seen this happening. Unfortunate, even I have seen some tweets happening around the articleship. I mean, article student owners or CAs expect them to do something else than what they are supposed to do. So don't do that. People are valuable. You cannot grow without people. So just respect them. Yeah, so here, if there is no capital with the company, and if you are very much convinced about the team is promising, and their model is attractive, this will have potential to grow, then get equity. Okay. And at times give that leeway also, like for example, in one client, what we have, how we have structured our fees is, we are not giving any discount, but we have mentioned that they have either choice to pay it now with 20% discount, or we can wait till first funding round or the subsequent funding round. So we know somewhere in August, best case, or somewhere in December, worst case, funding would happen. So you can also give client some leeway to clear your fees, be very patient, and first intention is just to understand and get knowledge about the business model, because every startup is very unique in itself, and you will definitely learn a lot of things from the startup which you can apply somewhere else and get your fees. So yeah, get equity or give some leeway. That is another thing which I have done.
So those were the challenges.
Yeah. Okay, so this is about. So if you see risk reward ratio, so accounting is a very, very important task for anything. Even if you want to use financials for analytical purpose, how every month numbers change and what is the impact of that with each of the heads, marketing with revenue or salary expenses with profit numbers or anything. So accounting is base for everything, be it compliances, be it strategies, everything. But accountants, if hardly gets paid. I mean, uh, even for junior level accounting, what we pay here is 20 to 25K a month for very important task. Okay. And again, the quality is important. So accountants are generally not get paid enough for a very critical task. Then comes the compliances. So generally, if you do compliances, what we have seen is fees is like 2 to 2.5x of what accountants are getting paid. If you see the hourly rate, so you have to always calculate your hourly rate. You should be knowing how much of your time is getting invested or in a particular task. So this will also help you to determine fees, whether you are doing a particular project at loss or how much profits you are making out of it. So always you should know your hourly rate. Okay, you need not to disclose it to anyone, but then you can compare it with what it was in the last year. So I always do that. You just determine how many hours you work per day, roughly, obviously, and then the full month's number of hours, and then just divide that, uh, divide your profit per month by that number of hours. So calculate that hourly rate of yours. It will help you to first evaluate yourself. Second, it will give you sense of fees to be charged to client. Okay, and then it comes to advisory. I mean, advisors, if you see even big names, AZB, Nishit Desai, they charge 40,000 per hour, which is insane. So 40,000 per hour is a lot of money, and they are getting paid for it. And with respect to risk, if you see accounting, for example, it starts in April, then 31st March is the financial year, but audit is finished somewhere in July, August, or September. So accountant's job literally gets complete in the next year of mid-year of next year. Okay, mid-year of subsequent thing. So your responsibility is endless. I mean, even after few years assessment opens up, then also you are asked like questions about why is this entry, then what this amount is, all those questions. So accounting, though they are paid less, their task tenure is very, very lengthy. Again, for compliances, if it is income tax with refunds, then people will call you and ask when they are going to receive their refunds. Whereas it is completely outside your control, right? Out of your control. So then also you are responsible for it. Versus if you see advisory, one has to just speak and share their knowledge. If I have a global product, and the parent company should be in Singapore, Indian subsidiaries in India, then how should we have the structure in place? Who should be directors of Singapore entity? Who should be on the board of Indian entity? So advisors just needs to speak about a particular subject and share their knowledge. Obviously, their knowledge is very, very valuable, but you should always focus to shift your skill set from compliances to advisory, because money is like insane and you are also going to enjoy it. And if you see, they just give the written opinion and then it ends the job or project, nothing thereafter. If something opens up, then again you are going to get paid on hourly basis. So there is nothing, your responsibility is open and you are not getting paid. So advisory is very, very important. And then after certain point of time, you just become a brand, okay, where people will pay you just for your presence. Believe me, I have seen many CFOs, okay, they are on a startup's board and they get good equity just for their network and what they have achieved in life. And there you, no one will hold you responsible for anything because they are approaching you, right? So also focus that, and this is not impossible thing, this is very much possible. You just need that determination and have clarity about the path that you are choosing. So once you become brand, then people will come you just for your name. They would want you on their deck so that they can get funding or value addition, and hardly you have to spend anything for that. I mean, in terms of time, of course. So aim for that. Even if you see influencers, all the YouTube channel and everything, uh, it is not mm, it is not expertise, but they have created brand for themselves, okay, and they are getting good money with no risk as such. So there is reputational risk, but it is everywhere. So you have to just build your reputation in the market. and then you'll be paid like anything. And obviously it would take time. After 15, 20, 30 years it would happen. But yeah, you should be very careful about how you want your career path. So that will give you your own branding. Then coming to how can you charge? So you can charge only in equity if company doesn't have any money at all, but you believe in the team, uh, then you can definitely consider equity as an option and no cash. Everyone knows the success ratio in the startup. I mean, hardly two to
They're
three.
off good.
Sorry.
Off good.
Okay. So hardly 2 to 3 startups out of 100 succeed. So success ratio is hardly anything, but there is no harm, getting equity. So think this way: if you are investing in share market, then also you might have, or most of the people would have lost money, right? So treat this that way, like you are investing in the equity market or share market, something like that, or crypto, and just have forget about the equity. It might turn into 10x, 20x, 50x. Just bet on the company. Then there can be only cash if it is a well-funded company, because equity is very, very important even for the startup. They don't want to give away equity because it will dilute their stake. So all the well-funded startup won't give equity to you. So there you have no option but to get cash, or it can be cash plus equity if client negotiates a lot and still you want some stake in the company. You can definitely have some hybrid model with some leeway if they don't have cash in hand. So hybrid is again good option where you won't regret if company fails eventually, like you are getting something out of it. So but do consider equity as an option. It is worth taking that bet.
Namita, can I ask a question here?
Sure, sure.
Abhishek here. So from a consultant standpoint or a members who are in practice, who are in traditional practice, and probably they, let's say they're taking up a client who is a startup. So is this proposal regarding equity comes from the client end in your experience, or is it you propose, okay, because you see some big potential in the idea, and then and how, as I think you rightly mentioned, maybe the equity is more dearer to the founders than cash, because they believe in their idea, the solution, and the next big thing. So how common it is, like do really the founders entertain, unless they're really cash strapped and don't want to kind of pay out in cash in the initial stages, and willing to share the equity part.
So definitely, this is very tricky, firstly, and this is possible only for the early stage startups, not post Series A, because after Series A, VC won't let anyone come on their cap table. So this would firstly can happen only in the early startup stage, and it can come either from the founders, or if you are very much interested, then you have to give two options. So what I do is, if I really want to be part of that startup, then I give two options. Suppose 2 lakh per month in cash, or 1.5 lakh per month in cash plus equity. So you have to make such options that it would founder would be more interested in giving equity to you. So you have to play that way. And sometimes it comes from the founders also. We don't have money, suggest what we can do.
So is it generally a straight equity you get in the company, or there are other instruments, like a convertible or something that you typically see?
Equity, plain equity, or it can be CCPS. So for convertible notes, minimum amount is 25 lakhs. You cannot go below 25 lakhs.
Okay. Okay.
Yeah.
Thanks.
And again, you have another option which I have done. So if founders don't want to give your equity, then what we do is, we get complete cash and we reinvest that in equity, as a like any other investor. So you can or you should in fact explore that. It's okay. It need not be against your invoice, right? You can definitely invest out of your reserves. So always be open to explore that if you can invest like any other investor in the company. So think like you are giving 2 months of your fees back to the company in form of payment. Please
Mm.
do consider this. I mean, so see, if you think this way, if you are going to earn regular profits or regular salary every month, there's no wealth you are creating. Equity is the only way to create wealth for yourself. I mean, I don't know if there is any other asset class where you can have 50x returns in 5-6 years.
Mm. Yeah.
Only two asset class with my limited experience I have seen: cryptos and startup equity. Otherwise, 50x possible. I mean, in 5-6 years, it's not possible in any other asset class.
Yeah. Agreed.
And again, cryptos is gamble. You know, here at least if you know people and if you are the advisor to them, then you know everything about the company. What is happening, what is not happening. If you want to exit with 3x, then you know this company has reached to this stage that was with luck or whatever window dressing they have done, but this is not going to sustain over long term. Then you can just get out with 3x returns, no harm. I mean, it is very easier. So let's assume you enter at a very early stage. Okay, they do the next funding round after 8-10 months, and then you are not very comfortable with what they have achieved in the last 8-10 months. You can always do secondary and exit. If
Mm.
you can offer secondary buyers a 20% discount at that valuation, people would buy it. I mean, you would have 5 to 10 lakhs worth of shares, which will happen, suppose 20 lakhs. Just offer discount and exit because you know what is happening within the company. Cryptos, I would say, is gamble very much beyond your control. You don't know. And to be very frank, we don't understand the space. No one does. Okay. So this is safer, I would say, compared to other asset class, and no harm trying out 10% of your total portfolio if you do the allocation of your uh, total net worth. That.
And one another question, Namita, do you see a separate class of shares being created with a certain restricted rights for the shares that you have been given, or is it like at par with what the founders shares you have? And I'm sure I think somewhere the founders would like to keep the control and some of the things. Maybe your probably percentage could be very less minuscule. It may not make a difference. But do you see that founders saying, okay, we create a separate class of shares and you will have restricted rights under that class of shares or so like that?
Yeah, so generally what happens is founders will always have equity shares and they would give investors, or rather investors would ask for CCPS just for the liquidity preference. So if tomorrow company shuts down, then CCPS holders would have first right over assets than the equity shareholders. So founders will always have equity. Investors generally ask for CCPS without any voting rights. So in all important decisions, only equity shareholders would participate, right? If you are a majority shareholder, then you have to be classified or you have to be given special rights in the shareholders agreement, and accordingly you have to amend your articles of association. Yeah, so there it is possible, but for smaller amount, you would get mainly CCPS or equity. And again, if you uh, for any special resolution or important decisions, they would need more than 90-95% of voting, which they ensure they have it. But post Series A, the whole equation changes. VCs would
Yeah.
always be more powerful than founders. I mean, and then all this entrepreneurship goes for it. Then there is nothing like. Then founders are also to be very frank. The very founders, sometimes it is very unfortunate.
Ma'am, we
And
have
one
Mr.
last
Vikash.
question.
Sorry, I am not understood.
There's a disturbance actually.
Mr. Vikash, you can speak now.
Yeah.
Namita.
Yeah.
Namita, hi Vikash. Yeah, I have a question with regards to the webinar today. Am I audible?
Yeah.
So my question was with regards to areas that you would be covering today. One, I understand you're talking about the broad strategy of dealing with startups, but we wanted to understand, would you be going into specifics, for example, angel taxation or taxation meant specifically for startups, any specific exemptions or grants that a startup should be aware of? What are the other specific services? And if you can quote examples as to how these services can be given to startups, that would be helpful.
Sure. So we'll come to that. We will be covering the tax angles, I mean specific provisions that apply to the startups, but we'll cover what are services one can offer to startup.
And would you be sharing some examples of those services?
Yeah, sure. Okay, so again, I'm sure you everyone knows why startups are important. I mean, everything is automated. This is future of any nation. If you see government is also very keen on startups. The number of incubators that we are having today, a number of incentives that even state and central governments are offering to startups, that is showing how it is important for the economic growth, because the employment opportunity, if you see even Swiggy, Zomato and all the logistic companies, so logistics are doing apparently very good. Delivery is coming up with IPO. So enormous employment opportunities all the startups are generating for the country, right? If you see their funding rounds, it's like 20-30 million dollars is nothing these days. You know, everyone is raising 20 million dollars. So where is this money going? So this is going in salaries firstly, and second, marketing. If you see any P&L, you will see salaries and marketing expenses. That's it. So all this money is moving in the economy, which is very healthy for the nation. Unfortunate is all the startups or most of the startups are loss making, which is okay. Again, there are two parallel economy running in the country, Bharat and India. So if you see journey of Khata book founders, so founders are also coming from tier 2, tier 3 cities. So even a person from metro and then tier 3, 4 cities are at par, because talent is everywhere. And post COVID thing, in fact, there is no difference if you are, you know, in Mumbai or some small town anywhere. So COVID has also given us that opportunity, like one can work from anywhere. Then young talent, I mean, if you see average age group of any startup, it is like 25 to 28, which is amazing to see. So this is our phase. India globally is a very much in a better position, or at an advantageous position where we have young population. So this is happening like right time for us, where startups are booming and we have young population. And of course, we have seen traditional businesses work versus startups, their mindset, their thought process, everything. So while ecosystem formed, you know, just to give you an example, there was a company and founder was having 70 lakhs check. I mean, 70 lakhs amount ka check in hand, blank. I mean, he just reserved the name. You can reserve the name, and then I think you get 20 days to incorporate a company. So he was having that check of 70 lakhs. He was building a system. Oh, sorry. Yeah, he was building a system where, you know, it will serve all the cabs of Ola and Uber. Okay. And within 10 days of check, he was not having a private limited company, and investor wanted to invest at somewhere else, so he just stopped the payment of that check. Okay, so one has to be very prompt, prepared for everything. Even if they ask you some query and SHA is in the middle of everything, you have to close the SHA or you have to come to complete the due diligence, then very prompt. I mentioned you are a
Ma'am, you are lost for last 5 or 10 seconds.
you have to very prompt. The thing is, like I mentioned, team. So I understand that there should be proper invoice as per GST rules. Okay, but one is not having a printed signed copy of invoice, but it is in the digital format, but unsigned. At times you have to accept that. Don't be rigid about the compliances. So compliances are there to follow, but we have to be practical at times, or in fact all times. So be rational and practical about what you advise them. Don't be rigid that you have to prepare the invoice in this particular route. It is not possible at times. You just have to give that support and ensure it happens eventually. Or just evaluate how critical is it to have all the invoices in place. Then lastly, up to date about the technology. You should be knowing how to use Google Docs, Google Sheets, Zoom meeting, there is Slack, Jira. So all these platforms startups use for their own management tools or own management. So just be aware about what all products are available in the market. Even for payroll management, there is Credily, Razorpay X. So people will come to you and ask you such questions. If there is no credit card in the name of company, so there are one set of startups who provide corporate cards facility even for the loss making startups. So you should be knowing there is Encash, there is Carbon Pay. So what all products are available in the market for companies or startups to effectively run their business? So that is again very important for you. So this will take later. Then let's see how how you can advise or where you can advise startups. So if you see a journey of any startup, then firstly there is something called POC. You must have heard this term. POC is proof of concept. So you cannot just start a business. You have to first complete POC, proof of concept. Is it viable or not? So we have also received such inquiries like, can we do POC for the startup or not? Again, there is no standard answer how one can do it, but you have to do market research just to see the potential for such product, how many people are really looking for such product, what problems they are going to the product is going to solve. Potential user interviews you have to conduct. So if suppose a particular investment is for women investments, I mean women who want to invest, okay, so you have to interview users based on that whether one would pay for such product or not. So initially, before even forming a company, you have to do POC or you have to check the viability of the product. There you can definitely help founders to check the viability of the product. If you are good with numbers, you can also see how profitable this can become, or what is the break even of such product. Would it break even with 1,000 users, or you would need 10 lakh users to break even? So just be practical and have logical reasoning to determine the result. Then comes the founders related services. Like people also come to us with two friends and then they speak, and then they want to understand from you whether both are compatible to each other or not to run a business. What should be the capital structure? Definitely one would be the CEO, other would be CTO, COO, anything. So what should be the ideal capital structure? Again, there is no standard answer to it, but you have to determine multiple factors. So I have also seen people coming to us to suggest the capital structure. Should it be, equally amongst everyone, or CEO should get more stake than others? Uh, so you have to consider certain factors, like if one is quitting their job first, suppose there are three founders, one is quitting first, then he or she should get more stake than others who are joining eventually. So this is again a common sense or logical reasoning which will help you to suggest something to the client, right? Again, there is no right or wrong answer to it, but this is some. Then you have to suggest key clauses in the founders agreement. So as a human, there will be disputes. So whether a founders agreement takes care of all the disputes or potential circumstances that might occur, like what if there are four founders and one wants to quit after 12 months? So they just start the journey. After 12 months, they will see some traction and one decides to quit. Then what will happen to his or her equity? So founders agreement should capture everything, all possible scenarios, how much salary they would be withdrawing and when. So initially there is no possibility of withdrawing any salary. So how you can creatively narrate or describe all the terms in the founders agreement, you have to advise your founders on that, because founders agreement is again very important document for any startup. Then again, business plan. So people will definitely come to you for business planning and lot of opportunity in this segment. So I have seen some people coming to us just to build a business plan, because they know the product, but they don't understand how to build a profit and loss account statement. What would be the revenue, tax implication? So suppose if you are in B2B segment and where TDS rate is 10%, straight away 10% cash is getting blocked, which is a lot. I mean, if your gross margin or if your net margin is 3%, let's assume, and if your TDS is 10%, that means you are in negative cash, which you have to factor in to determine the funding round. So if you are you think $5 million would be enough for 8 months, but if founder is not capturing TDS factor, then the whole plan will go on toss. So you are the one who are good with numbers, good with taxation, have understanding about the P&L, financials, all those things, technical knowledge. You can definitely earn good amount of fees from building a business plan for the startup. And why this is important is, firstly, it will give you an idea when to raise funds. When to raise funds is important with respect to product viability. Anyone putting in money would like to see some traction. Okay, if it is a product or application, then investors would like to see some users for that product. So when to raise funds, you will get answer to this question from a businessman. How much to raise? So like I mentioned, if founder thinks 5 million is enough for 8 months without considering GST or withholding of taxes, then everything will go in favor. So how much to raise will give you that. This answer will be will get from the business plan, and at what value to raise. So this is again very difficult question, how to value your startup. There is no standard answer to it, but you should just think this way. At the time of liquidity event, founders combined should have minimum 15% stake in the company. You cannot afford founders to dilute, because this is the only motivating factor for them. Founders hardly withdraw any salary from the company. What they have is equity. And if there is no enough equity for founders, then they will have no motivation to work for a product. So you will always have to ensure or think how to protect founders stake. Okay, even with startup recognition certificate, founders can have ESOPs. Okay, So eventually with each funding round, founders are diluting. You have to come and suggest, let's get ESOPs for you people. Very, very important to protect founders' stake in the company. And then comes the legality. So there are many products in the market which need various licenses from RBI, IRDAI, SEBI. So you have to understand how does it work with respect to licenses, registrations, then policy documents. I receive very frequent inquiries about forming these terms of use, then privacy policy, because for every website it is important, right? I have personally not explored this segment. I always refused, but very frequent inquiries on drafting privacy policy, terms of use, user agreements. Very, every business will need that, right? If you have a company or a website, you will have to have that user agreement, privacy policy in place. Even you cannot, or one cannot register on iTunes or Android app store without these agreements in place. So new area, but and very repetitive also. If you do it once and you get another client from the same segment, you can replicate that agreement to different company. So that area also one can explore. Again, what I have not explored is patent, trademarks, all those copyrights. So I receive inquiries even on patents, trademarks, but I have not done that yet. That is another segment which one can explore. Then while serving startups, you have to remember that cash is very important. I mean, everything is around cash. Valuation, fundraise, dilution, everything, profit numbers or loss numbers. So you can explore some of the things, like if product is into B2B segment where people are deducting either 5% or 2% or 10% TDS of your client, then go for lower tax reduction certificate. It is not at all difficult to get. Now it is completely online. So if it is B2B and you want to save on cash, then explore a lower tax reduction certificate. Another thing is ATIC, again new section. If you have startup recognition certificate, and if you are a profitable startup, then any 3 consecutive years would be tax free. So you can choose which 3 years you want to have that exemption. So very difficult to get this certificate, but definitely you should explore if your startup client is profitable. Then tax refunds. If you know refunds are stuck with GST or income tax, take that effort to encash those refunds. Okay, so wherever you can optimize on cash, you should do it. Then letter of undertaking. Many people I have seen not applying for LUT, which is like nothing. I mean, very simple procedure. They fail to obtain this letter of undertaking from GST, and then client has to pay GST on exports. So if you have exports and you are receiving uh, remittances against that export, go for LUT where you need not to deposit any GST. So all such very small things, but very critical for startup. You should take effort to know that. If it is edtech, then if you get approval from National Skill Development Corporation, then there is no GST. So the purpose is, if your company is into skill development program, then there is no GST. But getting this certificate is difficult, but you should at least take that effort, because just imagine if you get this, 18% is a lot of savings, not just in terms of cash, but your client's pricing would be competitive with their competitors. If you compare your client's offerings with other startup company, then it will definitely have that advantage over other company without GST. 18% is a lot. Then fintechs, again, some state or central or incubators give grants to the startup. There is this Atal Innovation Hub, which is central. So you can also try getting grants from such incubators. And again, incubator is your client, then there is no GST on services provided by the tech incubator or science and technology entrepreneurship. So again, many of such rules you would find under the state regulations or municipal. So just read about it, and no harm applying for that. You know, sometimes they give 10-15 lakhs grants, which is not bad, right? You should definitely try for it. Then comes the funding related services. Believe me, if you get any opportunity to work for the startup during funding, then you will be super important for them, because just imagine they are in the middle of funding. Okay, they would want funding anyhow. They would be more than happy to pay you if you solve their problem or save their time. So before funding and after funding, there will be different role. Before funding, what you have to do is clean up. I mean, if there are any TDS defaults, make sure you clean that up before you go for funding round. If there are any pending compliances, suppose you have not filed MGT 14, or ESOPs you have in place, but you don't have ESOP policy. It happens. Have that in place. If there are any pending returns under GST, just file it. Keep everything proper. From secretarial part, if you have never prepared minutes, which happens, okay, so prepare minutes and keep on record. Then get the valuation report from merchant banker or IBBA registered valuer, whatever is applicable in that case. Then before funding, closure of funding, you can also help your client with negotiating with investors. There are multiple rights, as you know, ROFR, tag along, drag along. There will be reserve matters, anti-dilution right. So all those rights you have to help client with the terms or powers that we should give to the investors. Okay, at what stage we are in, whom to give such special rights, because reserve matters is a difficult proposition to have, right? So you have to be very careful about advising clients on that. Another thing, important thing is instrument. Should it be convertible notes? Should it be CCPS or CCDs, OCDs, optionally convertible debentures? So you have to think about which instrument you should suggest for a particular funding. Very, very important. Then comes the due diligence. So due diligence on an average takes somewhere around 2 to 5 months to complete due diligence. There can be financial due diligence, legal due diligence, LDD, technical due diligence, TDD. So you are very critical part of that due diligence. Due diligence team would sit late night at client's office or virtually if they are doing due diligence. You have to be ready with all the folders. So this is very, very important. And again, because funding is so much important for a client, they would definitely pay you for getting this thing sorted. And then comes the after funding. So once you close a round, what you have to do? Okay, so there will be SHA, SSA drafting. So whatever terms we have negotiated with, we have to draft that in the agreement. Whatever instruments we have selected, we have to put that, you have to ensure like we have that in the capital structure. So I have seen this happening where founders agree or everyone agrees for CCPS, but there is no CCPS provision in the authorized capital. And getting provision of CCPS in the capital, authorized capital in Mumbai takes 45 days minimum. I have seen in Jharkhand, it takes roughly 15 days and you are stuck. You cannot do anything. You cannot even accept money. Because once you have CCPS in your authorized capital, then you can have board resolution and then general meeting. And it takes a lot of time to accept money and then issue shares against that. Because before issuance of any instrument, you cannot use that money, right? So ensure that you have provision of such instrument in your authorized capital and amend your AOA accordingly. Then come the treasury management. Just think this way: if your company has raised $20 million, obviously you are not going to spend whole $20 million on day one or in month one, right? You have to invest that somewhere. You cannot keep it in the current account with no interest. So you have to suggest to your client whether it should go in fixed deposit, then in what format. Should it be 90 days each, or you should break it in different tranches, or it should be in liquid funds. So how exactly you are going to deploy that money month on month basis, and you will definitely have some surplus cash after funding it around. So how you can manage those funds and earn some return on that? Then definitely you should advise your client. See, such small things you cannot charge client for this. Suppose they have 20 million and you suggest them invest in equity fixed deposit, you cannot charge for this. But you should be very much aware about such things, like we should be doing something about this funds, right? So that is very important. Then comes the virtual CFO services. So everyone must have heard about this service, very glamorous, I would say. Everyone is into virtual CFO services. But again, what I have seen in the market happening is people are providing normal services, what they otherwise do under retainership service, and call it as a virtual CFO service. So believe me, it should not happen that way. Okay, if you are doing accounting and tax filings for a particular company, you are not a virtual CFO for that. Virtual CFO meaning only you are working virtually for that client, and you are not full time with a particular client. You are free to allocate your time to that client. You are not full time with them. So it should definitely go beyond taxes and compliances. So what are the general expectations out of virtual CFO services? I'll share. Again, I would like you also to contribute to this if you come across with any such expectation or requirement from the client. So one is definitely the tax and finance. You are not supposed to do it yourself, all the compliances. You can either use companies in-house team for doing all the compliances, or your team. So what we do is, whenever we provide virtual CFO services, we put two components to it. One is purely virtual CFO services and other is retainership services. Okay, so that in future, suppose client wants to have in-house team, then at least virtual CFO services fees would continue without affecting anything, because virtual CFO services is very much in-person skill, right? So what you are doing is will continue to happen irrespective client has in-house team or not. Okay, so in virtual CFO services, you are expected firstly to ensure, just ensure if all the compliances, audit or regulatory requirements are getting complied or not on time to time basis. Okay, more importantly, strategies. How exactly you help company with selecting right set of investors. Believe me, getting wrong investor on your cap table is way worse than not having anyone at all. It is better to quit a company or shut down a company than having wrong set of investors. So you have to advise your client whether they should go with a particular investor or not. If we have done huge amount of fundraise, then should we acquire someone? So suppose if there are any synergies possible, then rather than building ourselves, should we just acquire existing product or not? So such request or such idea should definitely float from your side. What should be the go-to-market strategies? So we have raised funds, we have product in place. So what should be the strategy for go-to-market? How should we introduce ourselves? We should build a community around it. We should go with Google and Facebook ads, or we should pay something for media coverage. So you should roughly have idea about all such things. You know what is working, not working for the company, and it's okay to fail. I mean, if you decide to go with something and it is failing, then it is your responsibility to tell that and bring it to the notice of the management. Like, we implemented this plan, but this is not working out, and why is it not working out? So that they know they have to modify the plan, right? Then the company structure. If you have a global startup, then should your base be Singapore, Dubai? So many NFT marketplaces or many companies who were earlier in Singapore, now they are moving to Dubai. So you have to read news, what is going on in the global market. Accordingly, you have to advise your client. Should it be US, because in US, if you see, valuations are much higher than what we have. Even their Series A funding is like 3x, 5x of what we do here in India. So all such strategical approach should come from you. And then the business model. So business model is again very, very important, to save the tax leakages. So imagine if you are a marketplace, then you will have demand, you will have supply. At one part, you will have demand, and then you are a marketplace. So how should be the fund? So users should pay you, and then you will retain your commission and then pass it on to your partner, or users will directly pay to the partner will retain commission and then pay your share of commission to you. Okay, so which is the very tax efficient model. Very, very important. People will come definitely to you to see the flow of the transaction, because these days um, this is very important and difficult to understand. So for example, Uber, we know that if we take a ride, then we pay Uber directly. Then Uber on monthly basis or weekly basis settles with the driver. But at initial stage, they might have thought about it. What if users pay to driver first and they have the escrow account and then they retain there and then get? It is difficult, of course, but at B2B2C segment or B2B segment, this is important. Like, you help them with the structuring the fund transaction for the product. Then the resource management, again very important. Like small things, hiring versus outsourcing. If we are building a tech product, then should it be in-house or we should hire a outsider team? For marketing, should we hire, or what should we do? Then if we are purchasing laptops, then laptops should be purchased outright or should rent it out. Very small decisions, but very effective. You should definitely be part of such decision making. And then wealth management, what we have seen, if we are profitable or we have surplus cash, then how should we utilize it? We can also acquire some other company and expand immediately. So if you build something on your own, it would take, or it might take 9-10 months. But if you acquire some existing business, then what synergies or what benefit you would have out of it? Then budgeting. Immediately for fundraise and after fundraise, you have to budget yourself, right? How many people you are going to hire in tech, marketing, finance, sales, pre-ops, post-ops, all those things, pre-sales, post-sales. Then you have to assign a budget. And once we have actual numbers, then you have to do the variance analysis. So these are some tasks which are expected from virtual CFO or CFO. So you have to charge accordingly. What is the requirement? How much of your time will be invested in the company, and accordingly you can charge for this. So anyone who would like to contribute more on virtual CFO, because I'm sure everyone must have heard about it, and this is getting more glamorous in the market. Anyone would like to contribute for this? Also, we have missed, or we have not missed, but purposely. So I would also like to understand from you, like, what sort of inquiries you are getting from startup clients, and if you get any inquiries, then is there any difficulty in serving that, or you lack any business understanding? You feel confident if you are doing for the first time? Any such experience would be helpful, because I have also come across with some of the experiences in this.
Can we go ahead with the questions which we have compiled by the people who are like not able to unmute themselves, ma'am? This is Monica here.
Silva, I cannot see any questions actually in my list.
I will share the question from my end. This is Monica here from SIRC. I will
Okay,
share
yeah,
my screen.
sure. So please do share your experiences. Like I frequently receive inquiries, or calls from the known network. Like this is the case. So how should we go about it? What should be answered?
Is my
Client,
screen
all those.
visible to you, ma'am?
Yes.
Yes, ma'am. So we'll go ahead with the first question.
Sure. So first 4, I think we have covered till row 9, I guess.
Yes, ma'am. I'll just scroll down. Yes.
Okay, so how to identify successful startups? Really difficult, but initial stage, it is all about people. So if you read any book now on startups, then you will realize 3 P's are important: people, product, and profit. So even if you see in the market, investors don't consider profit as a criteria because it comes at the end. First is people, second is product, and third is profit. So initial stage, you have to just trust founders. If they are real hustlers, then they will pivot it. And even if you have observed the ideation journey from ideation stage to traction, then there is always some pivot. You start with idea A and then end up with Z or some other thing, because you learn from user interviews, from market survey, people give feedback on your product. So you have to pivot yourself. So I would say decide on the founders. If they are good, real hustlers, knowledgeable, disciplined, then they would do whatever it takes to succeed in the business. Even if they fail in one particular startup, I'm sure they will start another journey with different product. You just have to be patient with them. So there is no formula. At least I have not cracked. Then accepting shares where we are auditors, is it okay? No, you cannot. I think face value of 5,000. So below that, if you are having, then there is no problem. Otherwise, you are disqualified. Okay. So you cannot be auditor of the company if you are virtual CFO or shareholder in the company or accountant. So you have to keep that independence in place. And I would say it is better to be VCF of a company than the auditor. As an auditor, there is a lot of responsibility. You must have seen what is happening with the practicing CAs. They get inquiries even after 8-10 years of signing a particular document, and then you are clueless about what had happened before 8 years. So VCFO is definitely better proposition. So, and there will be disqualification at times. By taking and becoming a part of stakeholder, there will be independent. There will be conflict of interest. So you have to choose. But you can be shareholder and VCFO at the same time. So there is no, only VCFO and auditor is not possible. Shareholder and auditor is not possible. But VCFO and shareholder is very much possible. Startup is giving the equity to CA, but if CA takes equity in startup, then there will be the problem. Client engaged in software development, which country could be good for business registration for tax? So see, this will depend more about clients of that company rather than your own client. So you have to see which country clients of this startup they are based out of, because there will be multiple implications. Again, you have to see your people. I mean, if your client is outsourcing, then all the coders or software developers are in US, Singapore. Then if you pay something from India to them, then there will be withholding of tax, which would be very expensive, right? So 2 things you have to see: firstly, clients, and then secondly, people who are actually building the software. So there is again no straight answer to it. Yeah. And tax savings, I mean, in India, it is very difficult to have to save taxes, huge taxes. So unfortunate, but yeah, we pay a lot of taxes, mainly salaried people.
Have like posted the last question. Can we ask the sweat equity from client as a part of a fee to be the part of capital appreciation?
Yeah. So see, what we generally do is we as a part of fee, right? So what we generally do is we keep professional fees as a separate transaction than the sweat equity, because if you do sale of shares for a consideration other than cash, then you have to value your service separately. So if you are raising 5 lakh rupees invoice, 5 lakh plus taxes, and you are getting equity against that, then as per rules you have to also separately value your services. So just to avoid that, we ask client to clear that invoice, okay, and we infuse that back in the company by way of share capital. So that is just to save on paperwork and compliances. So that is a better and cleaner way to do it. Keep both fees and equity as a separate transaction. So see, this is all about negotiating power. If your company has multiple offers on table, then company would be in a better position to negotiate. If you don't have an investor, you have just one investor, and investor knows that, then you have no negotiating power. So you just have to squeeze on the power, how much power one has, and then just leverage it out. Again, there is no standard way to do it, but just ensure with. So for pre-series A, you should not ideally be diluting more than 10-12%. Okay, series A, somewhere you have to dilute 25 to 30% of equity. So you have to just ensure you can maintain more equity with the founders. And like I mentioned, at the time of liquidity, ideally one should have, founders should have more than 15%. So if their valuation become 1,000 CR, then they at least have 150 crores with them.
Those were the
Namita,
questions complete. And yeah, the member has like muted themselves. Yes, sir. You can talk.
yeah. So Namita, Abhishek here again. So in your last 13 years of career, and last 5 years predominantly into the startup ecosystem, what would be your advice, to the practicing members or to the people who want to get into consultancy? What things they should do to, develop that expertise in the startup ecosystem to advise the clients, and what are the things that they should do or they should not do, to take up this practice as a another portfolio, another service in their portfolio of services, and what would be the your advice? How should we go about it? And what did you do in your experience? Of course, last 5 years you kind of
Yeah.
covered a
So
lot of
again,
ground. Yeah.
right. So I'll share my experience. So firstly, uh, the environment. Okay. So environment is very, very important where you work for 10 hours a day. How I started is I operated from a co-working space. So that was Barclays Incubator. And that was the best decision for me so far. So what happened is that was a co-working space plus Barclays Incubator. So most of our clients are from fintech, just because we were in that space. And I would say almost 40 to 45% of the members were our client. Okay. So try to have in such environment where you get access to the startup ecosystem. It can be incubator, it can be co-working space. So if you have any place around your residence, then opt for that. It might be expensive for you, okay, compared to a isolated office, but it is worth trying that out. So try for 6-8 months where you are working out of such place where you get access to multiple people. That is one. Second, you have to read books. You have to stay updated about what is happening globally. Believe me, every startup is going global. I mean, there is no escape from it, and you are expected or you need to be updated about what is happening at global level. Less about taxes, more about business. And what I have seen over last years, many years, is it is more about speaking and understanding the business than tax. Believe me this. So if you for example, crypto space, I'm taking crypto example just because this is new for everyone, and many new terminologies you have to understand. What is staking, what is ledger, what is wallet, what is fiat crypto, what is happening in the backend. Okay, very, very important. Even if you observe conversation that we have with the clients, it is more about business understanding, what is happening in the market, their partners, their vendors, than the tax. Because they simply say that we don't care about taxes. As far as you are taking care of everything, we are okay. I mean, we don't want to hear about, we have to file this, that. Just take care of everything. So it is more important for you to speak and understand their language than knowing tax. And even for me now, I don't take compliances at all. We have a team, so they do all the compliances. At times, I don't even know the technical aspects of certain taxes, because my focus is more on business side. And believe me, there is good amount of money if you contribute for the business. Just think this way: what if you leverage your network and you can get lending of 50 crore for your client, just through your network? So that is more valuable for client than giving tax thing, because for taxes there are many people in the market, but understanding business of startup there are handful of people. So you have to understand what is a marketplace, how does it work. We have also done automation for the startups, where we use their coders and we design the entire finance functions in the system itself, where we get the data on periodical basis automatically from the system for TDS filing, GST filing. From 1st of July, there will be withholding of taxes on crypto exchanges. So you have to be prepared for that. Even they have tech people, they have coders, they cannot implement this withholding of tax, because there should be someone who understands business plus tech and plus implications. So even in 2016, they built one finance module, entire finance module for HR startup. And at that point of time, because we were knowing GST is going to be implemented, we built a system which will take care of service tax plus GST. So any change from service tax to GST, that transition was so smooth that client didn't suffer anything at all, where other people were struggling to get the data. Because if you see the user base of any company, they have like 1 million or half million users. So just imagine if you have total users of 5 lakh, okay, on optimistic basis, and 2 lakhs are active users, then also you will have 2 lakhs invoices a month, which is a lot, which cannot be handled by human. You need tech for that. So these are the areas where you can contribute for the business and where people will pay you, pay good amount of value, even hourly. So you should definitely explore more on business side. And again, all the accounting thing that is going to get automated. Even this clear tax is coming in. There is one company in New Zealand called Xero, Xero. So they have automated the entire accounting function, where if you upload invoice, they scan it, I mean there is OCR, they capture all the data and then account it. There is no need of any accountant for that, and it is doing extremely good, extremely good. So if this is the scene in New Zealand, I'm sure in the next 10-15 years there won't be any jobs for accountants, where even that is going to happen. Clear tax is doing income tax returns. So how good or bad they are, that is a separate story, but everyone is trying to capture that, market. Even for GST, when GST came in 2017, there were so many products in the market who were claiming that we can do this, that. This is a competition to the practice, right? And people, if ClearTax is doing income tax filing for 1,000 rupees, then anyone would go for that. Okay, I have seen people earning 36-40 lakhs per year also opt for such cheap service, where they don't guarantee quality, but then also people want to get it done for 1,000 rupees. So that is also a competition to practice. So unless you are in a such area where robots cannot do what you do, you will be outdated. You have to beat machines now. I might be exaggerating, but yeah, this is going to happen. I mean, you have to beat machines.
So within the overall ecosystem, Namita, any, you would want to name any few specific services? Again, it's a big ecosystem, and right from ideation stage to getting the funding, as you mentioned before, funding, after funding, a lot of things are there. Due diligence, getting the capital. What are the, maybe, I don't know whether the clients would like to stick to one consultant for a, as a one-stop shop for the entire ecosystem as they go into their growth path, growth journey. Or is it like they see that, okay, probably this part of routine services can be performed by someone, and then, some of the strategic or critical ones is taken care by somebody who's expert in a particular area? Because it will take some time, for the traditional, to move from traditional practice to advisory kind of a role, and these are, areas which has a lot of stakes involved, and people probably are betting their entire career or this thing from the founder's perspective. So,
Yeah. So, firstly, startups really want to stick to one person for sure because of multiple reasons. I'll tell you. So initially, I had shared. Currently, attrition is so high, like it is very difficult to retain employees. You know, especially startups. So, what is going on in the market is people are shopping around with the offer letter. And this is a real story of a tech guy. He freshly graduated from IIT. Uh, First job was 8 lakhs per annum. Then he worked there for, I think, 10 months or so. Then he switched. He asked for 18 lakhs package. Okay, so employer said, okay, so startup, everything is happening in the startup, 18 lakhs. Then with that offer letter of 18 lakhs, he went to another startup and asked for 26 lakhs and ended up with 26 lakhs from 8 lakhs. Real story. I know that person in person, I mean, first contact. Okay, so this is what is happening across all them, not just in tech more versus finance. So people are just shopping around with offer letters. So retention is very difficult for any startup. Okay, because of retention, what happens is, firstly, as a finance professional, one has to know the history of everything. So when we started the company, what was the mess? It is a complete mess at every startup. Okay. Then you raised pre-series A, you did convertible notes. Then that convertible notes has to be converted within certain timeline. Then you granted ESOP. So what is happening? So you will be more valued with time. So in one of our clients' case, I was a virtual CFO, and then in Feb 2021, they hired a full-time CFO, but they are still paying us as a virtual CFO. The only reason is, so that guy is capable of doing everything as a CFO, but the only reason they are paying us till date is we know the complete history of the transaction. What has happened when, and why we took certain decision. What was the reason? They can call me anytime and ask, this had happened that time. Investors are asking question about this. What we are supposed to answer. Okay, so you'll be very much valued if you know everything inside out, be it business, compliance, investments, everything. So just leverage that point, because CEO, there is no time for a CEO to look into all these things, CEO will be busy with fundraise all the time. CEO will have to take care of operations, hiring, everything, and then CTO won't understand anything about the finance. He or she would just be building the product. So you are the one who would be valued for such things, where other people don't understand anything about your subject. So very valuable. So, and they do want everything under one roof. So in fact, at some places we have asked client, you have large amount of data, don't outsource it, have your in-house accountant, but they are refusing. They are okay to pay us premium rather than having in-house. So once you have in-house person, then it becomes their responsibility to manage that. Whatever nonsense will happen, it will be their headache. But if they outsource it to you, then you will have to take care and you will have to ensure. So for suppose for me also, there will be resignations under this company, but then they know Namita would be consistent throughout. Okay, so even A is coming in, A is going out, B is joining in, C is going out. Whatever happens within our organization, for client there is consistency. They know Namita won't shut this practice and then we have to go to someone else. So that consistency they want, and which is very, very important for any startup. Very important. So they do want everything, even secretarial. So they want secretarial compliances also to be taken care by the CA.
So any Namita, any risks that you see, or in your experience you have come across a bad experience where something went wrong? Of course, any service, any consultancy that you provide, it comes with its risk and all. Maybe somewhere regulatory or reputation risk or something. So something which the members should be aware of and be careful in and defining the scope of the work or something like that, so that they are not getting unnecessarily into some kind of a dispute or something. And
So
last question would be what? Yeah, and last question would be for to start this kind of services, what kind of team you would require to start with? Maybe you could address these 2 points.
Yes, so about risks, I would say until 2020, there was no serious risk as such. And then suddenly 2021, uh, it was again new for me. ED started coming in, okay, in picture. So ED is again very powerful. Whatever corruption is there, anything that you settle at GST or income tax or whatever stories nothing operates against ED. Okay, they have their own powers, they have their own modus operandi, very powerful regulation or regulators. Okay, so in 2 of our clients' case, ED came in the picture, and then we were insecure about everything. Whatever data client is giving us, that is true or not. We were not certifying for any client, and what we have learned is it is better to have less certifications in place. And for some clients, in fact, we intentionally don't sign anything at all, not even 15 CACB. Strict no. Okay, so ED, for ED, it is like they will straight take you to the prison. Okay, and definitely, at least I don't have that connection, which we can use in such circumstances. Firstly, we are not used to this kind of circumstances, and we don't know how to react to it. So nothing has come to us yet, but now we are very, very careful about what we write in the email, what we write on WhatsApp, what we say over call. So even we are careful if someone is not recording our call, literally. Okay, there is something professional indemnity. If something happens, then there is financial risk and there is reputational risk. So for reputational risk, what we are doing is we are not signing anything. We are careful about the email writing, and we act as a whatever information client is giving, we believe it to be true. I mean, there is no say or there is no vouching or verification from us. We are purely accountants or we are purely compliance people. We are not certifying anything. That is to protect reputational risk. And second, I have not yet opted for, but I'm considering this professional indemnity insurance, which is to cover any professional, financial risk that might come in, where if there is any penalty then. So ED is definitely one risk that we see these days, where they are very active for fintechs, for crypto space. I mean, you must have seen in the newspapers also.
Yeah.
That
But
is
from
one.
the client side, and I understand the regulator risk which is there, and then like the ED mentioned. But from a client perspective, do they put some kind of a performance-based clauses and all, or do they expect that you're expected to be performing at so and so level, and then link some part of your remuneration or fees to that? Does that happen? Because yeah.
Yeah, nothing as such I have experienced. So see, with time, so if you act as a core member, no, then with time you build a very natural relationship with client, where
Mm-hmm.
you are invited to the family function, and that is the kind of rapport you build with clients. And fortunately, we always got good clients. They were very friendly, understandable, supportive. Even when I was on vacation, they ensured there should not be any calls to me. So all those things they understand, which is a good thing. And again, these days, what is more important is to have that soft skills or the people skill where you connect with the people. All business, all relationship, whether it is new relationship or maintaining good relationship, you should be human. When I say human, that means you should understand the approach. At times there was a situation where we couldn't recover our fees for 6-8 months just because client was stuck with the fundraise. So we understood that and we were supporting during that time. So these are certain things which you should understand. Like if client doesn't have money, don't stop their work for them. Be patient for the cash. They will pay you off eventually once they have uh, cash. So again, that relationship is more important these days.
Mm-hmm.
Just 1 second, coming to people again, getting good talent is difficult for finance specifically, and so we always ensure we have a good team. And when I say expensive, good and expensive, that means their caliber is very high. They understand it is okay if one doesn't know it, but one should be curious about learning new things and pay well to your people. I mean, it is okay if you make less profits, but you should pay what they deserve. So mainly we have CAs only, even for the compliances, and for accounting only we have graduates. So with respect to team, the strategy was always, if you find a good talent, just get that talent, irrespective you have work for that person or not. If you have good talent, work will come, believe me. If you identify good person, just have them with you. It will pay off over future. Because getting
Thank
good
you.
people is very difficult. Very.
I know.
We have compiled a few questions. Can I share my screen, ma'am?
Sure, Monica.
Is my screen visible to you, ma'am?
Yeah. So this name of the company is Zero XERO. XERO. How to start practice running? So not books as such, but networking is very difficult. Even at times you have to outsource some of the work. For example, for the first time we had gone for a P2B license, P2B NBFC license, peer-to-peer NBFC in 2018. That was new to me. We had to hire someone. So you need to outsource certain tasks to others. Then again in 2019, we did AIF formation, category 1, alternate investment funds with SEBI. That was again new for me. So don't be scared to accept such kind of proposals, simply outsource. So if you have not done something in the past, don't be afraid to accept that. You have to just have someone in the backend or along with you. It's okay if that person is the face even for the client, disclose that to the client, but don't refuse any work if you have not done before. You can always outsource and do in partnership. Yeah, so I don't think CA having COP will have any restriction with VCFO services, because so see, VCFO services is like any other service. You are just giving services what is expected from a full-time CFO. So I have checked this personally, that I don't find any restriction.
Those were the questions compiled, ma'am.
Okay.
So we are done with the session, ma'am, actually.
Yeah. So if there is no other question, then we can wrap this up.
Yeah, yes. So thank you so much for the session, actually, ma'am. So everyone were like bouncing with the questions, and you are like able to answer all the questions with the patience. And thank you so much for accepting our invite also, ma'am. Thank you so much.
Thanks, Bhumika, for having me. Thanks, Silva. Yeah. Thank you.
Thank you. Bye.
Thank you so much.
Yeah, thank you, Abhishek, sir. Yes,
My
ma'am.
pleasure.
We'll close the session.
Yeah.